You follow participants. Tree. Nope. Participants. One entry. Good evening. Good evening, Brandon and Jennifer. Can you all hear me okay? Just testing that out. Just drop it in the chat. Okay, cool, cool, cool. Can you hear my jams? That's another question. Can you hear the jams? Okay. Maybe that's good. So that way it won't for recording purposes. Won't be on there. Thank you for joining tonight. Not sure how many people we're gonna have. As I shared it a little bit different. So it's just gonna be a conversation, a training, going over some essentials. All right, where's everybody checking in from? Where are you? What city are you in? And how did you find out about tonight? Stone Mountain. Found out about through email. Awesome, awesome, awesome. We'll give people a little bit of time to come in here, and then we'll get started. And you'll be just fine, right? And what are you most curious in hearing about tonight? What's something that you're curious about learning about tonight? What made you say, you know what, I need to attend. I need to pop into this and see what is being said and shared and so forth. What do you do in this market? I love that kind of question. That is my kind of question. We're definitely going to discuss that. I'm going to give you a very simple process to follow so that you know what to do, when to do it, and how to do it in this market. So you just hold tight, Jennifer. We are going to get to that for sure. All right, for those of you all just popped in, where are you checking in from? What city are you dialing in from? And then how did you find out about tonight? Reno, Nevada? Steph, some Jen told me to get on. Awesome, awesome. Listening in from Amsterdam. Right. Awesome. We're gonna give people another 2 minutes and we're gonna get busy. So I'm not gonna keep you all night. It's gonna be very straightforward, informative, actionable, and we'll get into the good stuff. And one more time, what's something that you're interested in? Like Jennifer mentioned, that she's interested in learning what to do in this kind of market. And then, is there somebody else that you have a question about? Like, hey, what made you join this call? What would you like to get out of this call? What would you like to learn? Um, that's what I'm curious about. I'm a long-term investor and want to learn more about options trading. Right? We won't necessarily be covering anything particular options trading in terms of how you execute those tonight, but the principles of how to read what's happening is going to apply to options trading. And so you'll be able to use this to time exactly when you should do something in options. That's what this is going to be. Time is very, very important as it relates to options. All right, we're gonna get busy. If you don't mind, I'm gonna turn your video off here. Doo, doo, doo. All right. Just to confirm, you can see the Blackprint screen here, correct? Let me know if that is what you see. Let's put this over here. Okay, perfect. Perfect, perfect, perfect. All right. Well, I am Al Pickett, and I'm a trader coach. I've been trading for 20 years and coaching the past 10 years, teaching people everything that I know. Essentially, it's everything I do is principles. This business requires principles. It requires discipline. Whether you're a long-term investor, short-term trader, intermediate term, these are all just time horizons as it relates to how long you stay in a particular position, a particular trade, and particular investment. The only difference is the time horizons. And so, in addition to this, emotional control is very, very important as it relates to this. And you see on the internet, you see on the news, et cetera, that a lot of people are in panic because of this or that. Don't matter what this or that is, they're just in panic because the overall the stock market has been going down, and people see their investment portfolios going the other direction, and they start to panic. They start to think about, am I going to be able to retire? Depending on where you are in, if you're in your 60s or 70s, or you're in your 30s or 40s, you're planning out when you're going to be able to retire and how much you're going to be able to retire with. And so all of those different things impact people in different ways, but mostly it's emotional, right? And so emotional frameworks are very important, and that's something that I teach people as well. This is not a pitch. I do work with people, I do coach people, but this is just me sharing information that has been profoundly impactful and profitable in my life and with the people that I work with. So again, that's me, and I'm gonna move on to the rest. So how did I get started in this? 82%. That's the number. My financial advisor, previous financial advisor that uh, I started with when I was 22, he was able to give me an 82%. He passed away recently, and he was able to give me an 82% return in 1 year. And I said to myself, all he did was put the money in a fund, and he didn't, do much to it after that. He put it in a fund. It ran for a year, and I'm watching it go up. I'm watching it go up and down, and I'm at the end of the year, I go, wow, the time I was in the mortgage business and doing incredibly well, but I was landlocked, meaning I had to be at a specific place at a specific time in a specific city to run my business, manage employees, all of the things. And so I said to myself, like, if I can get anywhere close to 82% on my money, um, I wouldn't need to do another on an annual basis. I wouldn't need to do another business. And that's how I started in this. As I saw that 82%, my mind as an entrepreneur, I started thinking, oh, this no employees. I can be anywhere I want to be. There's no income limitations on this. I need to be in that business. And so that's how I got started. I called him up and I said, you know what, I'm going to take it from here. And I started to learn the business, just trial and error, because he really couldn't teach me what I know now, because his job was to get money under management and then go get more money under management, put it in a fund, et cetera. Not the day-to-day in and out of how to truly maximize on another level returns and so forth as it relates to trading and how I wanted to do it. So here's what you're going to learn tonight. You're going to learn how to read price through candlesticks. You're going to learn what a candlestick is. You're going to learn how to identify support and resistance. You're going to learn how to identify price ranges. And you're going to learn two P's: participation and protection. What does that mean? Participation is when you should be buying, and then protection is when you should be selling. So when you should be getting in and when you should be getting out. Does that make sense to everybody? And you can put ones, you can say yes. However either one of those is great to just to let me know you're tracking. And throughout this throughout this call, I'm going to be checking in on you. I'm going to be asking questions. It's going to be somewhat interactive, and you can just let me know in the chat if you're tracking. If anything doesn't make sense, if it's not clear, just say, hey, can you go back over that? This doesn't make sense to me. Oh, I need a little bit more explanation on this or that. That's totally fine. Happy to do that. And I want to make sure that you leave with clarity. After we go through these slides, we're going to look at some live examples. So I do want you to think about some stocks that or opportunities that you've looked at, or that you already may have long-term investments in. And I'll happily look at that chart and walk through the process and show you what I see Which should you be in? Should you be out? Should you be managing that? Another thing I need to say before we continue is that this is informational purposes only and not financial advice. I'm not your financial advisor. I'm not a financial advisor. This is just what I do for a living in terms of trading and teaching people. And here I'm just sharing my knowledge that works. So you have to do your own due diligence. Um, I need to say that. And I want you to think about this as the reason why the additional reasons why people are more emotional at this particular point, because they're not equipped. They're thinking about what they're going to do with the money and what they could have done with the money. And we're thinking about it in terms of possibilities and probabilities. And so I mentioned the two P's, participation and protection, but also the other two P's is just thinking about everything as possibilities and protections. There are no absolutes in this business. There is one that is the markets are going to go up and they're going to go down. That's the only absolute. So that's very, very important to state as well. I have one goal with this call is that for you to leave more educated, with more understanding and a simple process that you can execute for the rest of your life. That's the only goal I have with this is just for you to leave with clarity. So as long as we accomplish that goal, I'm gonna be happy. So we'll check back in at the end of the call, just make sure that was accomplished. And that's the goal. So moving on, let's talk about the current state of the market. Current state is everything is well up until a day or so ago, right? Everything was tariffs, 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 and people saw the markets dropping down and dropping, dropping, dropping. And usually, when something like that happens again, people become fearful because they're watching their savings and investments dwindle. And the reason this picture is up here is just to go through time, the 1930s, the 1940s, the 70s, the 80s, the 90s, 2000, 2001, 2008, the pandemic is really to go through this and show you there's always going to be a crisis. There's always going to be a crisis. And you really, really should, besides the human tragedy of things, you really should be, from an investment perspective, looking at these as opportunities to get position. Because the market is no doubt about it from the 1930s and before, the market is rigged to stay up. And so you can see that annualized total return from 1930 to 2024 is 9.8%. So, you can panic sell and you can panic do this or panic do that, but the market is rigged to stay up long term. That they being the powers that be are not going to let it, go. Their money's in it too. It's not going to zero. All right. So when you see these opportunities or you see these crises that happen, you have to change it to opportunity, thinking about it as opportunity because that's exactly what it is. And what I want to make sure you are equipped with is a process to help remove as much emotion as possible so that you can take advantage of clear opportunities. Now, for my in my career, I was around for what the 2008, 2009, no 2000, the tech bubble, I was around then. I guess you would consider, yeah, 9/11, 2008, 2009, the pandemic, and now we have the tariff situation. And there's even more that's happening from a global perspective with all of that. But again, look at where the market is now. It's just been doing nothing but making new all-time highs. Every time there's a crisis, they get a crazy pullback, a crazy retraction in the market, and then we end up making a new all-time high. So opportunity, think of it as opportunity first. Does that make sense to everybody? Can you see the history of crises and we look at what happened, what has happened over time is that the investments, the stock market has gone to new all-time highs. So it's all opportunity. It's all opportunity. All right, so things that you heard of, things that you're invested in, stocks, right? That's no doubt about it. Majority of people have 401ks, they have IRAs, they have company shares, etc. So everybody is really, really, familiar with stocks. And here's just a few companies. You have Meta, you have Nvidia, that was the market darling of what last year. You have Google, Tesla, Amazon, Microsoft, Apple, et cetera. And these are, a lot of these are, you see some tech and then you see consumer, et cetera, and auto. But this is all very familiar territory. And a lot of times people don't know that there are other instruments, uh, other investment vehicles that exist. So here you see oil. You definitely can invest in oil. Right now, it's has plummeted quite a bit. And let me say something else too. You can profit from both sides. Whether a market is going up or down, somebody is profiting on one side or the other. It just depends on how they are positioned. And we're going to talk a little bit about that, just a little bit about that later on. But there, whether it's going up or down, there's somebody profiting from everything that you see. So you on this screen, you see coal, you see steel, you have gold. Gold, like today, we'll look at the gold chart. It's almost at new all-time highs. So it just keeps making new all-time highs. Corn, cocoa, wheat. I have a guy that only trades wheat. He only trades wheat. He's a farmer. He knows wheat. He loves wheat. He only trades wheat. So it's just an incredible amount of instruments out there that can be profited from, and so I just want to expose that that's there. Lumber as well. I want to learn more about investing in REITs. Yep, that is real estate investment trust is what a REIT is, by the way. And so it's just basically it's a trust that's tracking all things real estate. All right. So additionally, there are currencies. Currencies, your dollar. A lot of times people will think about currencies only as, oh, I'm traveling to Mexico or I'm traveling to Europe. What's the conversion rate so that, my money goes further here or my money goes further there, or, I'm coming out more money by going to this country, et cetera. But these are what we call fiat currencies, paper currencies, and they can be traded and invested in as well. And I use the term trade and invest in really as one of they really are the same thing to me. There's people would disagree is like one is different than the other, but all of it just has to do with time horizon. Whether you are holding something for 6 months, a year, or 2 weeks, it's still you're seeking a return on your dollar, your investment. You're seeking a return. That being said, with currencies, you have the British pound, you have the euro, you have the African rand, you have the Japanese yen. All of these move up and down all the time. And this is the largest market in the world. Forex, foreign exchange, would be these currencies, these fiat currencies. And so it's the largest market in the world. At this point, roughly about $6 trillion a day is moving around the world. Every time you ring the cash register, you have governments, multinational organizations, banks, etc. Everybody in the world is transacting in their native currency in some kind of way, and all of that is flowing through the financial system globally. So that these are opportunities as well. Everybody tracking so far? Awesome. All right, and then you have cryptocurrency, which has emerged on the scene. It's been around for a minute at this point, but the adoption of cryptocurrency is still is not as large as our dollar or Mexican peso, et cetera. But it's getting there. It's becoming more and more mainstream. Wall Street obviously is taking notice. Pension funds are starting to, get positioned. Governments are positioned with Bitcoin and Ethereum. So these are the main two. These are the main two, the most popular two that everybody would know, Bitcoin and Ethereum. But there are many other coins out there, but I recommend you stick with the big dogs because this is where the liquidity is going to be. This is where the most money is going to be flowing in and out. So you have your cryptocurrencies. And I think about it as another medium of exchange. Um, and if we look at people are going to look at it as a store of value. Sure, if you got 100,000 and you buy $100,000 of Bitcoin, then yeah, it's a store. It's storing 100,000 of your dollars. That can go up and down with the volatility of wherever that $100,000 is. It can go up and down with however that instrument moves. If it's a very volatile thing, it's going to go up and down in a volatile way. If it's a very stable thing, then it's not going to move that much. So it's all a medium of exchange, and there's the idea that crypto is a uh, a replacement of the dollar. Well, you know, as of late, when the market was going down, crypto was going down. So, I can make a different argument about that. But think of it as a another medium of exchange and another opportunity. It's another vehicle that you can invest in. All right. The reason why you can understand me and you can understand every word that I'm saying, besides my southern drawl, is that we all have a common language. That common language is English. So that's the reason why you understand me so clearly. So the markets have a common language as well. And if you really, really want to take uh, just take your investments to a whole nother level, then it makes sense to understand what that common language is and how it works and start to speak that common language, understand it, see it, embrace it so that you can make decisions that are less emotional, more process driven. And I think I know from my own actions it's just going to lead you to better returns, better sleep, and when you see these headlines, you'll know that it's just BS. All right, that's the reality. Okay, so this is a visual representation of how all markets move. You got the little arrow on the left, arrow on the right. You see the one on the left, it moves up, it moves down, and then it moves up again. There's a language for that. There is a language for that. The entire market, every single one of the markets we just talked about, and every single market that exists moves in waves. And I'm very, very emphatic about that. I love the ocean, and there's a lot of nature as it relates, that's associated with the markets. But when the market is in an uptrend, it's going to look like on the left side. It's going to go up, come back a little bit, and continue to go up. When it's in a downtrend, it's going to go down, move up a little bit, and go down. What does that mean? How do you identify that? How do you understand that? How do you know what to do when you see when you think you see it? We're going to get into that next. But when something is reaching for the sun, that is like the idea is that it's in a downtrend. But if you can see it reaching to the bottom right side of your screen, then it's in a downtrend. But if it's reaching for the sun, it's in an uptrend. All right, so it's a very, very simple thing, a very, very simple way to think about it. But I'm going to prove it to you on the actual charts. And this was a very, very powerful thing for me because once I understood this, it changed everything. As simple as this is, once I understood it, that it really is this simple, it changed everything for me. But I'm going to prove it to you. Is that simple enough so far? Let me know. Is that simple enough so far? Okay, great. I do get excited. So if I start talking a little fast, You might see me cheese. I don't know if y'all can see me, but if you see me cheesing, I just get excited about it because it's just, it's just a beautiful thing. All right, so this common language, markets in the uptrend. So at the bottom, you see on the left hand side, you see where I have a low, right? There's a low. The market's going to make a high, and then it's going to make what we call a higher low. The only reason this is a higher low, and can you see my pointer as well? I just want to make sure you all can see my pointer as well. Okay, great. So the only reason this is a higher low because it's higher than the previous low. Very important. You have a higher low because it's higher than this, and then the market will make what we call a higher high. It's a higher high point. It's higher than this previous high. Is that simple enough? Low, high, higher low, higher high. All right. That's what a market is going to do in an uptrend. Very, very straightforward, very simple. Let me just add it here. Oops. There we go. All right. This is what it's going to look like in a downtrend. A market in a downtrend is going to have a high point, it's going to have a low point, and then it's going to make a what we call a lower high, and it's going to be a lower low. Now, what if you knew was something what if you knew you could look at a chart and tell when something with high with high confidence and high probability that it's a low or a lower high or a lower low? Wouldn't that be a powerful thing? Wouldn't it be powerful to be able to look at something just with your eyes and say, you know what, that's a low, or that's probably a lower high. That would then give you the confidence to say, okay, the market is likely going this direction, and I can make a decision around that. One that is objective. Let me say another thing. If the markets are a voting machine, when I say voting machine, meaning people are voting with their dollars, and whatever their opinions are about the market, about what it's going to do, what it may do, what it could do, they're voting with their dollars, right? So they're saying, I'm going to buy this because I think it's going to do this or I think it's going to do that. So when I'm looking at the price of a market, all the opinions are already on the chart. It's already in the price because people are voting with their money. Institutions, individuals, people like yourselves, you are voting with your dollars and you're telling me what you really feel with your dollars. It comes back to reality. You show me where people spend their money and I'll tell you how they really feel. The market is the same way. All right. So that's a uptrend and that's a downtrend. Everybody clear? Drop some ones if that's clear. Okay, great. All right, so now we're moving on to the introduction to Japanese candlesticks. And where Japanese candlesticks got their name from is back a long, 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 long time ago. Japanese rice farmers came up with this to uh, came up with this to figure out the price of rice, right? Whether it was trending up or trending down, so that they know how much to charge, et cetera. And so they built this network. They built a network to basically track these prices throughout history, and that's where it got its name from. So what Japanese candlesticks have been able to do for me is pinpoint objectively what's happening, why it's happening, and what could happen. So let me do that. All right. And so there's a way you're going to learn tonight how to read Japanese candlesticks. All right. On the left side, first, let me back up. How many of you if you've heard of Japanese candlesticks before, drop a one. If you've never heard of them, put zero. If you've heard of Japanese candlesticks before, put a one. If you haven't, put a zero. Okay, a lot of people have heard of it. All right, so everything is reflected in the price. I'm going to say that. You're going to hear me say it a whole lot, a whole lot. So on the left hand side, this candlestick is just a representation of what price is doing for a period of time. Tell me what your favorite fruit is in the chat. Tell me whatever your favorite fruit is, drop it in the chat. Mango, pineapple, bananas, watermelon. Who else? Kiwi. Okay, great, 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 great. I want you to think about whatever your favorite fruit is. This is how you're going to learn about Japanese candlesticks. You're going to learn about the price of the market of each, whatever your favorite fruit is, we're going to treat it like a market. All right. And so on the left-hand side, uh, this is what we call a bullish candlestick. A bullish candlestick just means that the price went up for a period of time. A bullish candlestick just means that the price went up for a period of time. So it's going to open at the bottom, it's going to close at the top, but it's going to have this little area. You see this right here? This is what we call a wick. The bottom is the wick. So every candlestick has a body. Some may not have a wick, but these have wicks. And what these wicks represent is where the actual price went to, but it didn't stay there. And I'm going to give you this example. This is my favorite example to use. Might sound a little dangerous, but if I drop you out of an airplane, you have a parachute. I ain't gonna do you like that. I drop you out of an airplane and you have a parachute and you land on the beach. Where your body lands, if you take 10 steps to the left, what's going to be in the sand? If you take 10 steps to the left and come right back to where your body was, what's going to be left in the sand? Let me know in the prints. Awesome, awesome. That's right. And if you take 10 steps to the right and come back to where your body was and landed on the beach, it's going to be footprints. And so what this represents is, think about it as footprints. That the price went there, but it didn't stay. The price went way up here, but it didn't stay. And that's how these wicks are formed, what we call candlestick wicks. But the body piece represents all of the price gains. So I'm going to take your favorite fruit. I'm going to take the price of kiwi. Insert whatever your favorite fruit is. The price of kiwi today, today is what? Thursday? Today, Thursday, the 10th, the price of kiwi open. We're going to say that the market opened at 8, and I'm just going to use an arbitrary time. It closed at 5. It opened at 8, it closed at 5. So at 8 o'clock, the kiwi market opened at $1, right? Maybe around 10 o'clock, the kiwi price dropped to 50 cents, but it didn't stay there. It continued to go all the way up, and the kiwi price for the high of the day, it went to $2. But by the time 5 o'clock came, the kiwi price closed at $1.50. So take whatever fruit you have and plug it in there. Does that make sense to everybody? Drop some ones. If it doesn't, it does make sense. Let me know if it doesn't. 0 if it doesn't. And I'm going to explain it one more time. The kiwi market open here. If it doesn't make sense, I'm happy to explain it again. The kiwi market open at 8 o'clock, $1. Dropped to 50 cents, maybe by noon. And then it went all the way up to $2 by 3 p.m. But at 5 o'clock, it closed here. And what you have is the range of price. Type in the chat 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Just type that in the chat and hit enter. Please. Isn't 1, 2, 3, 4, 5 just a range of numbers? So if I said, hey, how am I doing tonight? Let me know. one through five, five being the best, one being terrible. I'm just giving you a range to let me know how I'm doing, right? So one through five, that's just a range of numbers. And so all this is uh just like your fruit, the price, a candlestick is representing the range for a period of time. That period of time can be 5 minutes, that period of time could be a day, it could be a week, it could be a month, but it's just representing the range. Everybody with me on that so far? Because all we did was say, hey, the price was at one, it dropped to 50 cents, went up to two, but then it closed at $1.50. And what's left over is the price gains. And now we're going to talk about the bearish candle. By the way, these two get their names from animals. So the bullish candle got its name from the way that a bull attacks. And so when a bull attacks, it charges ahead. And so this is just a market charging ahead, essentially. So when you hear somebody say, or when you hear somebody, it could be anybody say, "Oh yeah, that looks bullish to me," or "We're in a bull market." That means the market is charging ahead. And the bearish candle got its name from the way that the bear attacks, because a bear claws down. And so when you hear something about a bearish market or a bearish candle, it's because it's going down. It's very, very simple. So again, a lot of this is related to nature in some way or another. But uh, this is nothing but a range as well. And so let's say, for instance, uh, the Kiwi market tomorrow opens at that same price. It opens at 150. The Kiwi market tomorrow opens at 8 o'clock at 150. It went back up to two, but it didn't stay there. And it went all the way down to, let me know what price it went down to. It's the same price that we talked about. I want to see if y'all paying attention. It's the same price that we talked about over here. It went all the way down to where? Maybe I should have said there's a prize at the end of this. 50 cent, 50 cent, 50 cent. Right, right, right. So 50 cent. It went all the way down to 50 cent, but then it closed at $1. All right. So that's all a bearish candle is. And this is the wick representing where price went to. We're representing where price went to but didn't stay. And this represent all the losses for that day in that particular fruit. It can be kiwi, it can be mangoes, it can be cocoa, it can be Tesla stock, it could be Apple stock, it could be oil, it could be Bitcoin, it could be anything. That's what that represents. Everybody tracking with me so far? Brittany, is that face because 50 Cent is low? Maybe. Maybe 50 Cent is low. All right, we're gonna move on. Let me know if you're tracking or if you need me to explain anything more about that. All right, so this is the same just without the pictures, right? Increasing. It's just an increasing. I'm going to be very repetitive because this is a business of repetition. If you have a process that you can repeat, you can prosper. If you have a process you can repeat, you can prosper consistently. So this is representing an increasing bullish candlestick, opens at the bottom, closes at the top. You have a high and a low. Notice the high and the low is at the same place. The high and the low at the same place. But the bearish candlestick is going to open at the top and close at the bottom. All right. Everybody tracking. Drop some ones. Let me know. Let me know. Let me know. Talk to me. Okay. Great. 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 Okay. So now I want to remember what we were talking about the uptrend and downtrend and how you have a low, you have a high, a higher low, and a lower high and a lower low. And I was asking about if you could have information, if you could see information there that could tell you that something has a high probability of being a higher low or a lower high or whatever. how powerful that will be. Well, we do that again, common language. We do that through support and resistance. Support and resistance. And so think of a support as a floor and think of resistance as a ceiling. Everybody live in some kind of structure. I don't think, yeah, everybody on this call live in some kind of structure, right? So you have a ceiling over your head and you have a floor as some kind of support. So think about it as that support is a floor, resistance is a ceiling. Just like this house. How many floors does this house have? And then how many ceilings does this house have? How many floors and then how many ceilings? Four, four. How many floors? How many ceilings? All I see is four. Okay, okay, four, four, four. Okay. All right, that's cool. Four and one. Okay. Anybody else? Okay, cool. All right. So what we have is a floor. Let me change the color of this to white. So maybe we need red or something. I don't know. That's not even big enough. All right. You have a floor, a floor, a floor, a floor. So four floors, right? We have a ceiling, we have a ceiling, we have a ceiling, and then we have a ceiling. You're not gonna pay attention to that little high right there. All right. So we have four floors and four ceilings. And what happens is when you have a support, the market is likely to bounce at a support. If you drop a ball on the floor, ball has any kind of air in it, what's it gonna do? It's gonna bounce, right? So if you have a ball, it's gonna bounce. And if you over here, I probably should have started with the left first, but here, this is a ceiling where if you throw a ball to the ceiling, it's going to reject that ceiling, right? Probability is going to reject that ceiling. But if I poke a hole, this is something we would definitely get put out the house for back in the day, right? Like if you poke a hole through the ceiling, that's a break of that resistance. That's a break of that ceiling, right? And so the reason I'm giving that example is because when price goes through a ceiling, it's a break of a structural point. If we're thinking about this as floors and ceilings, then when you have price that goes through a resistance, it's a break of a structural point, and it matters. Everybody tracking? Drop some ones if you're tracking. When you have price, when you have something that goes through a ceiling, it goes through. It's a break of a structure, a structural point. If you fall through a floor, it's a break of that structural point. And you probably on the phone with your lawyer, right? You know, you're somewhere upstairs and you fall through a floor, you broke some kind of support. Wait, sorry, can you repeat that again? Yep. So everything is floors and ceilings. Resistance is ceiling, and support is a floor. If you drop a ball, it's more than likely going to bounce. If you throw a ball to the ceiling, it's going to reject that ceiling. But when something breaks a ceiling, when it goes through that, that's a break of structure, what we would call a break of structure. It's a structural point. A resistance is a structural point, and a support is a structural point. And this is language. This is the common language of the markets, resistance and support. Got it? So then once you break that resistance, there's a likelihood that that old resistance is going to become some kind of support. Price will bounce at that support and then go up to the new ceiling. All right. So it's just floors and ceilings, floors and ceilings. So if I break this resistance, it goes up to the next point, probably comes back down again, and then finds support here and continues to go up. Can we see that as an uptrend? Can we see how that looks like an uptrend that you initially the drawing from the start? Drop some ones if you can see that. Okay, great, 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 great. All right, so now you see this is color coded as well, and I'm going to show you. We're going to use candlesticks to understand what's happening at each one of these places, so that we know what to do right here. We know what to do right here. We know what to do right here. We know what to do. What can be done? What can be done? What can be done at these areas, and what may show up there that gives us a clue that we should be ready to go. All right. Okay. Support and resistance is very, very simple, super simple to identify. Super simple to identify. Can you see on the left hand side? On the left hand side, you see a red candle, then a green candle. The red candle means what? That the price went where? The red candle means the price went where? Down, right? All right, good. And the green candle means what? Up. So all that's being communicated, say all that's being, it's very powerful communication. This is communicating to you that price was going down, but then it started to go up. Same thing over here. Price was going down, but then it started to go up. Does that make sense? Just the reverse is true over here. Price was going up, and then it started to go down. Y'all see where I'm going with this? Price was going up, but then it started to go down. I probably could have did that a little bit better. Just like that. All right. Okay. So if price was going down and then it started to go up, isn't that support? You see how that's being supported and price is going the other direction? Let me know. On the left-hand side, I'm talking about this one in particular. Price was going down and started to go up. That's what we call support. Anywhere you see a red candle and then a green one, that's what we call support. Drop some ones if that makes sense. Anywhere you see a red candle and then a green one, that's what we call support. Anywhere you see a green candle and then a red candle, that's what we call resistance. Because simply the price was going down and then it started to go up. And then when for resistance, the price was going up and then it started to go down. So this is your language. This is giving you something that you can identify, that you can see with your eyes. You don't need another analyst. You don't need anybody to tell you what you see as it relates to this. Very, very powerful. Now, do you have to study it? Yes. You have to study English. You have to study your ABCs and your one, two, three. So, this is no different. This is to make sure that you'll be able to watch this back. You'll be able to see it for your own eye with your own eyes in just a minute. But you won't be able to unsee it. I do know that. And it's very, very, very powerful. All right. So everybody tracking. Drop some ones. It's enough people on this call. I want to see some ones if we're tracking. Now, if it's not, do like Brittany did. She said, "Hey, can you explain that again?" I'm happy to explain it again until you get it. So, drop it. Okay. All right. So, do. All right. So resistance, support. Better use green. Support here, resistance here, resistance here. Does anybody remember what we call to identify trend wise the on the left hand side that first support? What do we call that? What do we call this one? And then what do we call that one? What do we call this one? And what do we call that one? How do we label it? How do we give it a how do we give it some importance? I'll tell you. This is a low. This is a higher low. This is a high. This is a higher high. The only reason is this low point right here. I mean, this low point is higher than this low point. This high point right here is higher than this high point. That's it. That's the only difference. This low is lower than this. This low is lower than this. So this is the higher low point. This is a high, and this is the higher high. Everybody tracking? Okay, let's move forward. So I'm only going to talk about buying tonight because the majority, again, the stock market is rigged to stay up. So it's better that you be on the buying side as it relates to stocks because it's rigged to stay up. We went over all the crises. It's just better to take the buy. It's better to be a long-term investor in the stock market on the buy side of things. So um, it's better to do it that way. So here's the participation, when to buy, and I'm going to talk a little bit about this. Let me just do this real quickly. Second. Oops. Okay, there we go. Okay, so when to buy, participation. We call that support, right? Red and then green is support. Remember that whole idea of higher highs and higher lows? So when the market is making higher highs, when it's continuing to move like that, you see how this candle closed above that or is moving above that highest point? That's what we would call a breakout. And the probability is that the market is going to continue to go in that direction. Is that simple enough? The probability is the market's going to continue to go in that motion. What's in motion generally stays in motion. We don't get in front of trains. If a train is coming, everybody stops. Nobody gets in front of trains. So when something is moving up, you don't want to go the other direction. You want to go in the direction of the that when it's moving up, you want to go in that direction. I want to make sure that this is super simple to everybody. Drop some ones if that makes sense. You have support, and then when the market starts to move, continue to move up above this highest point, it's communication that you should be in the market and participating in the probability that it's going to continue to go in that direction. All right, that's one. The second way to participate is notice that this was resistance, right? Let me use red. This was resistance. So when price is moving above a resistance point, is breaking a structure, is breaking a ceiling. Is that correct? Yeah, I haven't gotten to protection yet, Terry. I haven't gotten to protection yet. So this is breaking a ceiling. So that is also communication that you want to be a buyer. Because let's go back really quick. We have time. Remember, when it's going above, uh, when we're breaking a resistance, it's breaking a structure. And the probability is that it's going to continue to go up. The probability is going to continue to go up. So uh, when we go above a resistance, that is what we call a break of structure, and the probability is that the market is going to continue to go in that direction. It's making a higher high. This was the last high, and now it's making a higher high. This was the high, and now it's making a higher high. Drop some ones if that's clear. What's in motion generally stays in motion. So this is how you participate. And we're going to look at some examples in just a minute. So yeah, we're going to look at some examples in just a minute. We're an hour in. I think we're tracking very good time. All right. Any questions about participation right now? Are there any questions about participation? Drop it in the chat before we move on. Awesome. Okay. Protection. I believe in this whole, mm, you want to know when you need to get out. And I'm going to show you some examples tonight of stocks that people say, "Oh, it's going to come back. It's going to come back. It's going to come back." That's a hoping person. That's a hoping person. Ain't nothing wrong with hope, but hope don't work in this business. Um, so you don't want to be hope. You want to be knowing. You want to know the things that you can know. I want to know when should I get in. I want to know when should I get out because I can always get back in. You can always, 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 always get back in the market. But I don't want to be in wishing I was out. I would rather be I would rather be out wishing I was in the market than in wishing I was out saying, "Oh, I hope it come back. I hope it come back." And I'm gonna show you some great examples of it not coming back. Okay. And so it doesn't matter. Risk has a support. It's a break of structure. It's a good entry. Um, that's a great question. So when you have resistance, when you have resistance right here and price goes above that, closes above that, it's starting to close above that, the probability is going to continue to go that direction. The difference between the two is this is resistance right here, right? And what has happened here, you're a lot of times you're going to see this at your higher low. You're going to see that at your higher low more often than not, where the market has dropped some and now it's at a higher low, is you're going to see a red candle and a green candle. The difference is support has formed here already. So now you're just waiting for confirmation that it wants to continue to go in that direction. The difference between the two is that support has formed here and it's continuing to break out in that direction. And then the difference over here is that this is actually resistance. So there is structure there that says, hey, this is a high point, and once we close above that, then probability is that we continue to go in that direction. Does that make sense? Is that clarified? It's a great question. Okay, awesome. All right, protection, protection, protection. If all the candles were green, you wouldn't participate. It depends. It depends, but you want to look at. We're going to look at different kinds of examples, but I want to give you some pure, tried and true things that you can look for, just like we just talked about. We're going to look at nothing but examples like we talked about. The two examples of the P's that we talked about is what we're going to look at, and then protection. All right, so protection. Protection just means where's my stop loss? What a stop loss is just say stop me from losing. So I don't want to lose any more money. Stop me from losing. So whether that number is $100, $500, $1,000, or whatever that number is, you have to know what you're doing. So if you have $10,000 invested in something and you say, hey, I don't want to lose more than $500 of this. I don't want to lose more than $1,000. That means you know how much you want to lose, and you can put what's called a stop loss, meaning if the market were to drop from this place, because that's going to happen. It's not always going to go straight up after this. If it were to break structure like that and then drop down, then hey, get me out of here. I don't want to lose more than that because it can continue to go down. Low This is one of my favorite sayings. Low can always become lower. And so, people will, normally you hear people say, "Oh man, it's on sale, it's on discount." Well, low can always become lower. So we want some kind of communication that price wants to continue in that direction, and we have a common language to do that. So get me out if price drops below this area right here. Does that make sense to everybody? All right, great. All right, so then on the right hand side, this example, if we're buying right here and the price drops below this support, get me out of here. Get me out of here. I do not want to be in that. I can always get back in if price wants to continue to go in that direction. And here's a quick way to think about that. Here's a quick tried and true way to think about it remember, we're talking about possibilities and probabilities. So let's say I have 100, I have 100 marbles. I'm just going to use marbles. Am I telling my age? I have 100 marbles. And every time I see this setup or this idea, whether long term, short term, or whatever, I'm going to risk one marble. I'm going to risk one marble. And if I lose, if it doesn't work out, I lose one marble, minus one. All right. But then every time that happens, I know, all right, now I got 99 marbles. Let's say I lost one. And then I lost another. I got 98 marbles. And then I lost another. I got 97 marbles. But when it does work out, I make four marbles. I gain four marbles, five marbles, six marbles, whatever the case. But I don't want to risk a lot because some of these they're just not going to work. But you know what I'm protecting? I'm protecting my marbles. I'm never going to say, hey, you know what? I got 100, so let me risk 50 marbles on one opportunity. Let me risk 25 on one opportunity. Because if you lose 50, that means you got 50 left. And if you do that again, you out of business. If you risk 25, that means you have 75 left. So if you do that three more times, it means you're out of business. That's a quick risk management, a way to think about long-term investing is that you never put all your marbles in one thing. You never do that. Does that make sense to everybody? The seven with the line, that's funny. Drop some ones if that makes sense. If that example of risk management of how you think about opportunities makes sense. Drop some ones. I want to know. You are never putting all your chips. You're never betting the house. We don't bet the house. As for amateurs, ever. All right. So everybody tracking. Good. Great. 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 Okay. So now I want to take a look at some examples. Y'all ready to look at some examples? Did you come up with any stocks? Did you have any stocks that you want to take a look at as well? Drop those in the chat because we're at the end of this. Any other questions about this we move to before we move to the examples? So let me stop this here. Your question is. Okay, I'm trying to connect what we're learning here to what's playing out in real time based on what you taught about higher highs, lower highs. What signals are you personally watching moment that average person would miss behind these crazy headlines? Yeah, we're getting there. Right now, you're being educated on the common language. So now we're going to take that and we're going to take it to the charts and look at these ideas real time. But it's like it is the majority of people are not just let me just say what it is. The majority of people don't have this information. So if you don't have the information, then you should be, what's happening? And you're watching the news and people piecemealing information, and you're getting it on Meta and Twitter and all of that, and it's just a whole bunch of misinformation. So what we're doing here is getting concrete processes and things that you can identify and look for and use to make objective decisions. And so where we're going now is we're going to look at the charts and we're going to take that information first and identify these things. And then we're going to look at some of these ideas that people are sharing and talk about how you would take this information and apply it to those stocks. So that's where we're going now. Kansas City buy stocks, or yeah, it applies to everything. It applies to everything, every instrument in the world it applies to. All right, so let's go over here. I'm gonna start with Apple. So I'm gonna share my screen here. One second. All right, there we go. Full screen. All right, now you all should be able to see my screen. This is my favorite part. All of it's my favorite part, honestly. All right, so this is the monthly chart. I recommend that that you look at the weekly and the monthly charts. You know, we'll talk about daily and so forth, but look at the weekly and the monthly charts. We're going to look at either the weekly or the monthly to talk about what's happening, ideas, and so forth. All right, that's how we're going to use those two time frames, weekly and the monthly. And all this is saying every one of these, we're on the monthly, every one of these candles that you see is representing a month in time. Every candle that you see is representing a month in time. So this is the month of April so far. This is March. This is February. This is January. This is December and so forth. Everybody tracking? Drop some ones if you're tracking. Okay, great. Okay, let's talk about resistance first. Can you see that there is a green candle and a red candle? Green candle and a red candle. Green candle and a red candle. Everybody see that? Right here. So we can easily identify when you have that kind of scenario, a monthly situation. This is a month's worth of price action. We can clearly see on the chart that we don't need to be a buyer right here at this place. This candle basically closed right there at the bottom. So we know we don't need to be buying Apple right here at this price. And you see another resistance over here, and you see that the market is falling after that. And so imagine somebody saying, "Oh, you know what? I'm gonna buy. I'm gonna buy right there," and it's continuing to sell off, and it's showing you clearly that there is resistance in the market. And we break above that? Did we have any prices that went above that area yet? We don't, right? And it's continuing to fall. So we don't have anything that says, particularly, we don't have anything on this time frame that says we need to be a buyer. Can everybody see that so far? Resistance, resistance. And so I want to just show, I want to show some support and resistance first, and then we're going to go back in history in Apple, and then we're going to look at some of the other ones. But I want you all to see the concepts in place. I want you to see these concepts panning out first. Can you see this as, let me fix this. Can you see this as support? Wherever you have a red and a green candle, red and a green candle. See the red and the green right there? See how that candle went up some? The next one went up. We talked about that as participation. I'm going to start. We're going to do these just seeing support and resistance first. Second, we're going to talk about participation and protection, and then we're going to look at some examples. That's how this is going to go. So you have support right here. You see support right here. You see support right here. You see support. I just want to make sure you all see that wherever it is, you see support. And I need to make a statement about this. You see resistance. You see resistance. You see resistance. You see resistance. Just because the way we want to think about support and resistance is that it's a fact. It's something objective. It's something concrete. It's something we can see. It does not mean the price has to go the other direction. Just because it's support doesn't mean it has to go up. Just because it's resistance doesn't mean it has to go down. We have to put context together. We have to put the entire system. We have to put the entire process to use so that we can make decisions with the information that we see. So just because it's there doesn't mean that it has to do one thing or the other. We just want to be able to identify as support and as resistance. Everybody with me so far on that? I want to make sure everybody's tracking. Okay. 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 So now how do we put this information together? How do we use this to make decisions? I need to go back in history first. We'll go back in history and then we'll come back to where we are. Let's go back to 29. We're going to go back to 19. And I'm just going to use horizontal lines. All right. And I'm going to just start right here. We see support here, right? Everybody drop some ones if you see support there. And then there, you see resistance here, right? We're just going to start over here. Now, this candle, this monthly candle is the candle that closed above that resistance. That is called a what? Somebody let me know in the chat. Let me know in the chat. When you have a candle that closes above a resistance, what's that called? When you have a candle that closes above the resistance, what is that called? Break of structure, right? That's a break of resistance. Just call it a break of resistance. A break of resistance right here. It is making a higher high. That is true. But that's a break of resistance. Can everybody see that? This candle right here is a monthly close. It is communication from the big dogs that they want to drive the price higher. That is a close above that area. Everybody with me? I want to make sure. Okay, great. So from that place, you can be a buyer right here. You can be a buyer. As soon as it's closing above that area, it's a break above that resistance. And your stop loss is going to go under the support. So from a price perspective, you have 52, you're a buyer at 53.04. And if price comes below this support, say 42.12, then you want to be out. 53, and we're going to move this forward. I'm going to show it to you just moving forward. 5304, and then below here, you want to be out. So what we're looking for now is another break of resistance. Can we see this green candle, red candle? That's resistance, right? You want to be a buyer here. That monthly close, it closed above resistance, right? Above this area. This is the resistance. This is the close above it. And we're going to put a stop loss under here. Even when the market with the market moving up and coming back down, it still never hit 47.94. Drop some ones if you're with me so far. Stay with me. So you seeing how simple that is? Oops, didn't mean to do that. All right. Monthly. We're just looking at the monthly time frame and weekly time frame right now. Here's another one. You see the resistance? You see the close above that? Did that candle close above it? It did, right? So if you're going to be a buyer there with a stop loss under here, under the support, it's a larger stop loss, but did it ever come back to that area? Never came back, right? Make sure we're tracking so that we've identified three of these thus far. We're going to move up and we're just going to look at, see what was the next time we had I'm just going to move this up a little bit. Mm, I'm not even going to use that as, I'm going to use clear examples. Clear examples. So you have resistance right here. We see green candle, red candle, red candle. Sometimes you're gonna have this in a row, right? You're gonna have green, red, red. That's inconsequential overall. The place, the resistance, we can see that price. See the Remember how we talked about price going to a place but not staying there? You can see how these wicks, we never went above this area. Can everybody see that? Let me draw a circle around it. See how the price never went above that area? It went above that area but didn't stay. Can everybody see that? All right. This is the candle that closed above it. That's the candle that went above it. And so we're going to say, hey, you know what? I'm going to be a buyer when we break resistance right here. Does the body have to close or the wick? The wick is not a close. Only the body is a close. Only the body is a close above. Let me talk about that again one more time. Remember that the candle closes at the top. The bullish candle closes at the top. There are no closes above this area. Can we agree? Drop some ones if we can agree that there are no closes above this area until that candle right there. I want to make sure that everybody's tracking on that. Very important. All right. So when candle closes here, that close, I'm just putting it in that area. Stop loss is going to go under here, under support. Did we ever come back to support? Nope. We went up after that, came back down, and then continued to go up. All right. Let's do another one. Just kept going. So here, I'm going to use this area right here. And we just been watching them and watching them and watching them. This right here is resistance. This is a great example. Notice how price did not close above that area, went above it, but didn't close. This is the candle that closed above it. All right. So if you're going to be a buyer right here and stop loss under this area right here, I'm going to move the first red line up. Notice price continued to go up. It still hadn't. This is present time now. This is July of June of 24. So after buying here, it went up some, and now it's coming back down, and you're still hasn't hit your stop loss. But I know where I need to be out of a market and wait for that same thing again. Now imagine if we have to see where this is going to form, but I know right here, right now, I would want to wait for it the probability is that if it goes above 250.27, then it's going to continue to move up very fast. But what happens with markets is we may not have to wait way over here because we don't know where it's going to stop turning. We don't know where it's going to stop turning at, but whenever it starts to turn, it's going to start that same process. And as it starts to give you resistances that it can break, let me draw that again. I didn't draw that well enough. We don't know where it's going to stop, but once it does and it starts to move up, it will likely give us resistances that we can watch to break above, and you will already be in. Does that make sense to everybody so far? Can you see how we're using this present day? How we're using that simple approach present day? And keep in mind, we're looking at big monthly time frames. Monthly time frames. Drop some ones if it makes sense so far. Need to look at some different examples really quickly, and I want to go over to, is not making sense? All right, so let me ask you what part isn't clear? Let's get some clarity. While you do that, while you type that out, let me show you an example of, I'm just gonna do, I'm gonna do, let me show you an example of, oh, you know what a great example of, is a great example. This is why you don't, this is why you don't buy and hope. This is Peloton. Remember when Peloton was hot? Pandemic times went up to 170 bucks. 170 bucks. Look where it's at today, $5.50. So imagine if you bought here, you say, you know what, it's gonna come back, it's gonna come back, it's gonna come back. It still ain't coming. You know what do you, it's not back. And so if you bought anywhere in here, that means you got to come all the way back up just to break even. Just to break even. So that is why you got to know, I professionally have to know where I'm going to participate and where I'm going to protect myself, where I'm going to get out. I have to know that. Let me give you another example, and then I'm going to answer the question. This is Neo. This was another one that was hot. I need to know where I'm going to get out. It never gave you new signals and all the way back down. There is no instrument. There is no instrument. This is I don't know what else is out there, but you know what was a this was popular. Went all the way up to 120 bucks, and now it's at 25. So I don't believe the buy and hope. I don't use outsider information. I don't use any other information. All the information that I need is right here on the chart. It is either moving up or it's moving down, and there's a strict process for determining that. We're gonna look at some of the other examples too. All right, let me go to this. Will Bitcoin be a real-time example? Yeah, let me check that. I can understand the historical aspect and follow you with the explanations, but I'm getting lost on how to track real time. Great question. Let's talk about that. So let's go back to Apple really quick, and then we'll go to some other examples. I'm going to look at Bitcoin as well. So real time, we're looking at the monthly chart, right? Somebody quickly tell me, for participation, what do we need to have happen? Quickly tell me, what do we need to have happen for participation? Participation means, where do I buy? And we're looking at a monthly time frame, by the way. I need to restate that. Break, James Kelly. Break, Willie Jones. Break of structure. Break of structure meaning a break of resistance. Right now, you have price at 190.42. We don't have that right here, right? So what we really, real time, 250.45 would be an idea. Again, this price coming here, the way it's set up right now, above 250.45 on this time frame would be a break of structure. But as I was saying, by the time we get up there, you may get another signal that's lower than that. Let me give you an example of what that looks like. Here's an example. Take this, take this high point. This is real time. Take this high point. What I'm telling you is buy above 250.45 when a monthly close above that, because that's going to give you a high probability that price is going to continue to go in that direction. All right. Now I'm going to go find an example that looks like that. And this is an example back in what day was this? 2019. Yeah, let's use this. This is an example like that where price was at a high point and then it dropped. So that's something real time, right? So I gave you two ways to participate. Two ways to participate. Those were one, you have a red candle, right? And then you have a green candle that's like that. And then once price moves above that like that, you can be a buyer. And so what I want to show you is this. You see the red? Well, let me put that back up there. Do, 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 do. Need to do it like that. 1 second. Patience with me. Boom, 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 boom. And here. And all right. So you have resistance right here, right? You have to wait. That's right. You have to wait for a break of resistance, or you have to wait for something like this. If you want high probability, simple, easy to follow, high probability, this is what you want to wait for. So you have support right here, and see how that candle broke above right there? You can be a buyer right there. Stop loss under here. And that's going to get you in a high probability opportunity, and you can see price just continue to go. Same thing over here, no different. Let's go over. You have maybe you're not waiting for this one, but you have a break of structure right here. High probability. Boom. Stop loss under here, and it continues to go. So it may form, as I was mentioning, it may form before it reaches that 250, but the rules are the rules. Right here, break below above that area. You can be a buyer right there with a stop loss under here, and it continues to go up. So the rules are the rules. They work. They're there for a reason. They're there to guide you. There to get you involved, and they're there to protect you. That's right. That's right. This applies to everything wild. So head ahead, like to get it before it spikes to make huge profits. One has to do research, upcoming companies and products. Yeah, do you ever move your stop loss? Yeah, I don't, personally, I look at what price is doing. That tells me everything I need to know because either the train is moving north or it's moving south. Because if I need to get to if I need to get to Boston and I'm in Atlanta and the train, the train is not moving, then that does me no good. No matter how beautiful the train is, no matter how gracious and amazing the conductor is, no matter how many awards the conductor has made, if the train is at the station, it does me no good. So I need a train that's moving, and being able to look at the price is allows me to tells me exactly what the train is doing. It's either moving or not. All right, so here's an example. Here's another example, and I'm going to go through the other ones. This is Bitcoin, right? So remember when Bitcoin made 100,000 and everybody was, oh, Bitcoin's 100,000, it's at 100,000. Well, there's your resistance right there. Does any of this from a monthly perspective, does any of that say we should be buying Bitcoin right now? From a monthly perspective, just rules, what you learned tonight, there's nothing there. Right? But look at, I'll give you some other examples from, this is a great example. So this was one of the last bull run where 2022, where price dropped all the way down, dropped all the way down, dropped all the way down. And then you finally had a break of resistance right here. And then you had another break of resistance right here. It never went below that. And then you had another break of resistance right there. Right? This is from a monthly perspective. And so here's a resistance right here, right? And the question is like, well, do I gotta wait for price to come above that? It may come before that, but you still gonna follow the rules of, oh, here's resistance right here. Price close above that, and that'll get you in the big move. So it always comes back to following those principles. I'm glad it's very eye-opening. Is that helping? Carla asked, do I ever move my stop loss? Yeah, I move it up. I never increase it to say, I never take it the opposite direction, meaning give it more room. Now, if I just give it more room, it'll work out. No, that's a cardinal sin because it's there to protect me from where price should not go below or the opportunity is not a good one for that particular time. It may be great at another time, but for that particular time, it's not. All right, so let's look at a couple of more. Let's look at a couple more stocks. Let me go up here and see which stocks. Drop those stocks again if you have them. NVIDIA, NVIDIA, CAH. NVIDIA. Let's look at NVIDIA. Remember when NVIDIA was the darling and everybody was, man, it's running, it's doing this thing. It's no, that's not it. That's not what I'm looking for. NVIDIA. It's pushing, it's pushing, it's pushing. All right. At what point do you move it up? I'm going to give you an answer for that as well. All right. So this is NVIDIA. All right. So let's just start 22. This is 22. And again, I'm only looking at the monthly. This applies to every time frame. Everybody in the Blackprint, we use this to execute on smaller time frames on a day-to-day basis. Same process, same thinking. We do have some more anomalies, these anomalies that a lot of people don't know about that we use to time everything, but same principles overall. But this is resistance. We never got to break above that. This is resistance. We never got to break above that. This is resistance. We never got to break above that. This is resistance. We got to break above that. That's your buy. This is your stop loss. This is to answer Carla's question. Price starts to move, starts to move, starts to move. It's continuing to move. You can start moving your stop loss when like this, when you get that second month moving, you can start to move that to under each monthly low. So every new month push, when it starts to really, really push, start to move it under these different months like that so that you can continue to lock in gains. Does that make sense? That's just one way to do that. It's an easy, simple way. Is that when it's pushing on a monthly basis, then you can start to move your stop loss under the previous month. But that gets you, you're not in a move, you're not ahead, you're not getting ahead in terms of you're not getting in too early. But here, the market is starting to move up again, and it's giving you clear breaks of structure to that, sorry about that, to the top side, and you be a participant here, stop loss under here, and let it continue to move. And the same thing is true for this right here. Even this buying at 61 and having a stop loss under here, don't worry about that because it still continued to go up. All right. And now this is the high. That's the high. And this is another resistance. So once price stops going down and then starts to go back up, the probability is that it's going to continue to go up, and you can use nothing but a simple process to identify that and participate and protect yourself. So right now, 124.06, probably we go above 124.06. The probability and the possibility is that price continues to go higher for NVIDIA. That makes sense to everybody? The stop loss is always going to be below support. I think you came in, you may have came in a little late, so you'll be able to watch this back, but the stop loss is below support. No, this does not mean this is a good stock to buy. This means that there's a process, as the process that we talked about tonight is that above 125.01, the probability is that the price is going to continue to go up. That doesn't mean that you buy right here. If I'm looking at the monthly chart, this is not something I buy. If I were looking on a smaller time frame, or smaller time frame, yeah, then maybe there's no doubt there's an entry, there's an opportunity here, but we're just talking about monthly and weekly time frames tonight, and I think important because the majority of people are going to be working. They got families, they got businesses and other things, and they want something more like, I want to put some money on it long term. I want to invest in it long term. So I want to have you have that perspective. And then if you decide that you want to do something short term, you can take the same principles and apply it to the short term. All right, QQQVOO. Let's do VOO. Vanguard. All right, so you see that you don't have any here, you don't have anything here that says, hey, I need to be an absolute buyer right here. The new all-time highs are would be above this area. But go back in the history. Let's go back to the history. Let's go into history here. And I'm going to start at this high point. Start at this last high. Think about this being where it is and this being where it is similar, right? So you have a high right here, you never broke above it. High right here, you never broke above it. High right here, you never came above it. But in this area, we start to come above it, right? This area right here, we start to close above resistance, in which you can have a stop loss under the support, and then it just continued to go up. And then the next opportunity came above here, right? And it continued to go up. And then the next opportunity came above here, and then it continued to go up. But right here, right now, you don't have anything, but it may develop at some point, over a period of time. Is that pretty clear? So if I were looking at this today, then it was on the monthly chart, it would be 554.31. But in time, a better price may develop. Okay. Let's look at two more. I want to know, um, is this helpful? That's what I really want to know. Is this helpful? Have you gained some insight? You Are you at a place where you cannot see it? So this is a great example. Who said this Ken? Who said drop Ken? Uh, it's a great example. Chad. Okay. Look at this chart. Notice I'm not looking at this, I'm not looking at anything but the price because it's telling me people are voting with this only. And price is either in distribution, meaning going down, or accumulation. It's being accumulated. But this was the resistance. So I could have said, you know what? The price was $67.22 and it dropped to 56. It's on sale. And you bought it. And then it dropped all the way down to 16, 18 bucks. And so what looked like it was on sale was actually too much. And now you got to get all the way back up to that just to get to break even when you can have. But again, that's why you're on this call because we're gonna have you have a disciplined process, something proven, something you can see, something you can test, and something you can trust. We never had another resistance break. Nope. You're not buying that. Nope. Right? Nope. There's nothing there. That was another one right there. That was a good resistance right there. And here, you see how you had where I want to do. You see how this green candle close above this area? In this case, the stop loss wouldn't go under here because that's not the lowest point. The lowest point is here. So you would have, does that make sense to everybody? This is a resistance. This is a candle that finally closed above it. It wouldn't go under here because that's not the lowest point. This is the lowest point. So that's the support. And it never went below that area before going back up. And this was a few months ago. And so you would take that same thing, same approach over here. Whether you took that buy or not, you would take this one right here, this one right here from September 24. And then that one started to go up. And then the next opportunity with this is here. So you need this monthly candle, basically May. You want to watch this in May because if it closes above this in May, this would qualify as a setup. This would qualify as a opportunity, and you would be a buyer with a stop loss under here. And that's how simple you would keep that from a long-term perspective. Would you have used your participation option early? I could have used the participation option earlier, but I also want to keep, think the easier thing to identify, which is that breaker resistance. That's the easier thing to identify for the majority of people. When should you use the weekly range? You can use the weekly range anytime. You can use any time frame you can apply these concepts to any time frame you want. But you just want to make sure you follow the rules. I'm just doing the monthly just so that everybody can follow in a very simple way. But you can definitely just you apply everything that I showed tonight, apply it to the weekly. What were you saying before you put the boxing gloves on? That if we break the rules and get in before we're supposed to, we'll likely lose first and wait longer. I mean, you know, if you if you don't have a process to participate, if you don't have something structured to participate, then how are you putting the odds in your favor? And then how do you have something that knows where you can be objective about where you get out at? That gives you some clarity about where price, if it's not going the if the probability is low that it's not going to work, then you have a place where you can actually get out and know how much you're going to lose. So if you are what you're saying is if you get in before we're supposed to, we'd have to likely lose first to wait longer to bounce up. And that kind of just goes back to the point where that sounds like hoping to me, and I don't hope. And so, that's just there are rules for a reason because I don't know that price is going to come back up. I don't know. Yeah. So, I don't know if price is going to, but I use rules and that's first and foremost. Are all platforms created equal when reading charts? I prefer TradingView. TradingView is really, really incredible, really, really easy to use, really, really user friendly. That's my number one. That's why I'm using it on this call because it's so easy for everybody, easy to navigate. It's very, very user friendly, and you can back into different brokers if you decide that you want to, execute on something. So. That's what I prefer. All right, so great questions, great questions. I know we're over time here, but um, I want to know, I want to look at one more, and then I want to open it for questions, and then we'll wrap. How about that? So give me one more stop, and then we'll wrap. DJT. Is that Donald Trump? Trump me. Oh, this is a great example. This is a good example. You remember when this was pumped up and it was, oh, well, he's gonna be president, so you might as well get some of that because it's going to the moon. I remember those conversations. That was the highest point. 177 was the highest point, and it's at $18 now, $18.79. Or 180 or close to 174, and just kept coming down, kept coming down, kept coming down, kept coming down, kept coming down. And it's at 1879 right now, and this is from a monthly standpoint. So yeah, maybe if you get back above 34.49, but there's no reason to be a buyer right now. I don't pay attention to candle types. We'll look at one more. Yeah, let's do. All right, Kang, 341. Yeah, so you can see on the left-hand side, if we're looking at real time, this is this, right? So you probably need to either close above that or close above this high. So above 379. But over here to the left, this is something that, obviously I'm just going to show process to show where you could already be participating in this. Never close above that, but you close above this one right here. So we're going to focus on that. So you see how price closed here? The stop loss will go under the low and you could be a buyer. See how price, this is a resistance right here, stop loss under here. And in this case, you'd have to buy at 243. I'm just showing where, let me delete this. I need to show you this is the resistance. This is the candle that closed above it. And you'd have to have a dollar, basically a dollar stop loss. But after that, it basically, wow, it shot up to $9. So same process, same thing. It just requires you to wait. Does that make sense? Great examples. Great examples. Absolutely going to send a copy of the recording. Um, last few questions, and then we're going to wrap up. Last few questions. Any other questions from tonight? Did I deliver on the one thing? That's the question from that I have for you all. Did I deliver on the one thing? You should narrow down stocks to analyze. You can use FinViz, Carla. You can use FinViz. FinViz.com is it's also simple to use. And I would just, in terms of narrowing down, what's an easy way to narrow down is find stocks that's making new 52-week highs. New 52-week highs will give you a list and it'll truncate like if it's making 52-week highs, it also means that we also likely have a very strong market and it's going to be a lot of things making, or there's going to be enough quality things making new 52-week highs. And then you'll be able to apply and you'll see things reaching for the sun and you'll be able to apply this process and find opportunities. All right, so I'm passionate about this. It is my life's work, a part of my life's work, and I love it. And I remember uh, how the Blackprint was formed was I saw how bad the advice was on the internet. I saw how bad it was on the internet, and it was a find a problem, fix a problem thing. I could have, talked about how bad it was, but it's like, okay, I can do something about that. And what I wanted to give people is what I wish I had in the beginning. That makes me very, very happy, Brittany. Very, very happy. I want to give people what I wish I had in the beginning, which is something simple, something I can follow, and something that just without the fluff. That's really what it comes down to. And so, yeah, this was all a dream for me. Just I saw that it could be done, or I thought it could be done, and then I was like, I know it could be done. And I would see the big banks, I would see how profitable they were every single month, and then I knew it could be done. And then I just had to keep going until I figured it out, until I streamlined it and to make it extremely simple for myself. And then there's also the psychological aspect of this. So there was a lot of things I work with people from a psychological standpoint because we all have our different relationships with money. So whatever those relationships are, you bring those relationships to the markets. You bring them to your investments because they're how you are, and it's how you make decisions. And so that's why I'm very staunch on like, okay, what is the process for making decisions? And is it something that's repeatable? Is it something that's proven? And is it simple? And so that's what you have here tonight. Thank you all so much for taking the time to hang with me this evening. Thank you for your time, your attention, your questions. This is recorded. I'm gonna get it edited up just the back end and so forth, and then get it out to you all so you can rewatch it, share it with your friends and family. That would be great. And really, really appreciate it. Do you think Trump's tweets and announcement will dictate what the market's going to do? Don't really care, to be honest. Whenever you have the next time, I'm gonna give. Let me do one thing. What do I want to see tomorrow? Tomorrow. Watch the news tomorrow. Watch CNBC. What's the other one? Bloomberg. GMGC. Uh, Watch tomorrow. This is a in the Blackprint. We have been buying gold. We have been buying gold for months. Months. This is a 3 month chart, so this is showing quarterly. Watch. If you go look on CNBC right now, I guarantee you that the headline says gold makes new all-time high. I guarantee you that it says that gold is making new all-time highs. It's the price that's creating the headline. So when you see something like cocoa or lumber or oil or whatever, and it's like, oh, it's doing this, it's the price that's causing the headline, not the headline that's causing the price. So that right there changed everything for me. Just really seeing that for myself. So big thing. So I don't watch the news at all. I just trade the price. So great question though. Great question. All right. So I'm glad that this was helpful. I'm gonna get it out, and yeah, I hope that you can too. If you have questions, you can follow me on Mr. Al Pickett is all my social media. Mr. Al Pickett, two T's, and links in my bio. If you want to have more in-depth conversation, you're thinking about the black print, you think about more help, you think about trading, whatever, I would love to speak with you. And that's it for tonight. All right. So use this. If you, at some point in the future, if it's been helpful and you find an opportunity and use it, shoot me a message, tag me in social media, something like that. However you want to do it, I want to know how successful you've been with the information. All right. Have a good night, and I wish you a prosperous, healthy, and loving rest of 2025. All right. Peace.